You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by CBOE Live Vol. CBOE Live Vol is the leader in equity and index options trading technology, providing professional and retail traders with the most sophisticated options risk analysis, compliance, and trading tools. CBOE Live Vol offers a broad spectrum of advanced trading technology, including the Live Vol X, next generation execution platform, and Live Vol Pro, the new standard in options trading front ends. Visit livevol.com for a 15-day free trial today. And by Russell Investments, the home of Russell Indexes, which calculates approximately 700,000 benchmarks daily, covering 98% of the investable market globally, including more than 80 countries and more than 10,000 securities. Approximately $4.1 trillion in assets are benchmarked to Russell Indexes. For more information on Russell Indexes and RVX, please visit russell.com/indexes. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it's time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo from a little thing we like to call around here, the optionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. Number 14, adding to the network in a couple of hours. So today, actually, we'll be out. You guys won't hear it for a little while. We're going to do a little behind-the-scenes work on it, get all the I's dotted and T's crossed. But pretty soon, hopefully by even next week, you'll be hearing number 14 on our network. So no longer will we be hovering around the lucky number 13. Number 14 coming soon, so stay tuned for that. And, of course, where can you find all that goodness, including our 14th program when it goes live? Well, of course, the easiest place is over there on the old mothership, our flagship online portal, theoptionsinsider.com. Pretty much your one-stop shop for all things options. Surf on over there, get some breaking news from the options market, get some old options education, get some analysis, get some strategery, get some unusual activity, of course. Got a bunch of that. Got some breakdowns, volume reports, midday, end of day. You guys love our hot options reports, so we're doing those all the time for you. So lots of cool stuff. Surf on over there and check it out. If you haven't bookmarked it, what the heck are you doing? Bookmark it forthwith, sir, and get over there right away. And, of course, while you're there, we make it pretty easy for you to check out the radio as well. There's that big player. You can't miss it right on the homepage. You hit play, and whatever the most recent episode on the network is, that's what you'll get. Of course, if you want to be a little bit more selective, there's the call-out on the right and the Insider Radio Network tab on the left. Both of those will take you to whichever program in our deep and extensive archive that may catch your attention. We are also, of course, available on all of your favorite platforms, iTunes, TuneIn, Stitcher, so on and so forth, including even via our mobile app, available for iOS, Android, and the beloved, in fact, new addition to Fire OS. Actually, it's a new Kindle, not a new Kindle Fire, but still, we're up there on the Fire OS as well. I did see some of you have asked, hey, what about Windows Phone? There is a app called, I believe, the Podcast Source that our partners over there at Lipson create. So if you download that on the Windows Store, you can get our stuff through that app. It's a bit of a clunky way to do it because they kind of have all of their shows on there, thousands. But if you need to get it on Windows Phone and our app isn't available for you, you can do it that way as well. So a little bit of a workaround that I found for you guys over there. And joining me on the old Volatility Views program today Beaming in once again from the scenic, nay, palatial corner office. He's finally done sorting through his taxes. That's the kind of problems you have when you have all those income and all that income and all those private islands, clogging up the tax man's time. But he's finally free to join us yet again. Mr. Russell Rhodes from the CBOE Options Institute. Mr. Rhodes, welcome back to your corner office, I should say, and to the Volatility Views program, sir.
Today's tax day?
Oh, wait.
It is tax day, Russell.
I think you have to go.
All right, so no, I'm not in the corner office. I'm in Oklahoma at school. I actually just tweeted a picture of where they set me up so that I'm out of the way and nobody has to listen to me do this.
Oklahoma.
Oh, don't do that. Don't do that. Don't do that.
On the plains.
No,
Sorry.
Don't do that. That's the worst earworm. A couple of people that I go to school with do that, and just about when it goes away, it comes back when I have to come back here. Don't do that. Oklahoma. So, Mark Longo, exactly what does forthwith mean? You used that in the intro.
Yes, I did. Coming forthwith means it's coming soon, very promptly. Hopefully, promptly. I'm being a little bit optimistic here. It may take a little bit longer, but I'm an optimistic fellow. So hopefully it'll be coming, very soon to a carrier of our programming near you. Probably iTunes, but our app, Stitcher, all the fun places. And if you heard a little voice in the background there, as well as some frenzied typing listeners, that means only one thing. We are joined by the greasy meatball himself. You're like a tween girl in many respects. You never stop typing, never stop texting, whatever the heck you're typing over there. But we're glad to have him join us here from the land of Option Pit, as well as, of course, by way of Carmen Line. Mr. Greasy Meatball, welcome back to the program, sir.
Good to be here. Great to be here. Good to be alive. Great to be alive.
There we go. I did see, I'm just looking, Russell, as you're speaking here. I'm one of my many duties monitoring all the different social media outlets. I do see your picture there of the palatial corner office. Got to say, I like the laptop. I never pictured you as a festive laptop fellow, but apparently I was mistaken.
It had scratches on it, and I had to cover them up.
Who's that gunslinger staring at me?
That is Pistol Pete, who is the mascot for Oklahoma State University.
Oh, nice.
And the only Division I mascot who fires a gun.
Well, there you go. Playing to the home crowd, I see there in Oklahoma. I get you. You got to do what you got to do, and we've got to do what we've got to do. That means it's time to get on rolling with the show and get on into our volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review. And in the little interlude there, I retweeted your photo, Russell, so all of the masses can see your lovely setup there in Oklahoma State, as well as, of course, Pistol Pete staring at them. Oh, so lovely. And, of course, we are welcome indeed to the Volatility Review. We are recording this on Friday, tax day usually here in the States, but through a weird holiday loophole, not so much today. We got an extra weekend under our belts, but it is indeed April 15th, noon Central Time, so right around middle of the session here today. And as we're recording this, things are pretty tranquil for the most part on the old front. Most of the major indices off slightly on the day, and VIX cash a little bit of an inhale today, but nothing too grandiose, up about nearly a quarter of a handle or so, right around south of the 14, right around the 14 handle, which I do believe actually is where I prognosticated last week. I said around, I think, let me pull up my numbers. I said around, I think, 14 to 14.5, if I'm not mistaken. So I remember Mr. Russell trying to talk me out of it, trying to do the old switcheroo, saying, there's some earnings this week. But I would have none of it, sir, and here we are. My pessimism on vol was quite rewarded. Not a lot going on in the earnings front this week, at least from a vol perspective yet. We'll get to that in a little bit. But since Mr. Rhodes tried his darndest to dissuade me last week, we shall start with him. What caught your eye in the week that was? Some interesting, a few interesting days this week that we can get into in a little bit here.
I'm surprised that vol's as low as it is. I'm going to stick with the earnings thing, and we've got a slew of names. Mason, our new intern at the Options Institute, is diligently trying to put together the list of all the stocks with weeklies that report so we can get that out there before the end of the trading day today. And goodness gracious, there's like 60 or 70 of them. So, we made it through the big financials reporting this week without much damage. But next week's a big old minefield. So, it might be why VIX is still hovering around 14 or so, despite not a whole lot going on in the market. I mean, I know the S&P is down slightly, but you got, VIX closer to 14 than 13, and I just wonder how much of that's in a little bit of anticipation that we've got some things on the horizon.
Yeah, it is funny. They're not really. We're going to get to that in crystal ball, but we talk about it a little bit now. Of course, the next week is when it really kicks off. Not to malign Alcoa or some of the other names this week. And you're right, we had a few names. We have Citi. We had Citi, of course, this morning. We had J.P. Morgan earlier this week. A lot of financial names. We can just, I guess, get to the earnings stuff at the top of the show here, but we did indeed have a few. We even had some airlines. We had Delta. We had, of course, Bank of America in there as well. So there were a decent number of names. Not enough for me to be a strong buyer of vol, clearly, but still not enough to maybe cause a bit of a ruckus, a bit of turmoil. We did have some turmoil, not really earnings related to this week. Again, we'll get to that in a wee little bit. And next week, of course, is kind of really where the rubber is going to meet the road, where a lot of the names that you guys pay attention to and that trade actively. Not saying you guys don't trade Alcoa. I'm sure a few of you out there sling some aluminum on occasion, but some more market movers coming up next week. But before we get to that, Mr. Greasy Meatball, what caught your eye in the week that was from a volatility perspective, sir?
It was interesting. We tried to sell off and tried to get some vol early in the week, and then it just flushed come kind of afternoon on Tuesday and through Wednesday. It was pretty impressive the way it actually did flush. So that was, I think, one of the things that I really thought was interesting. And I'll tell you, Russell, I'm surprised that we don't see a little bit more vol ahead of this whole Doha thing. And I would have thought that we would have seen something like that as well.
I tried to jump in just a second ago when you were making fun of my favorite stock to trade, Alcoa. Alcoa. When I'm looking at these earnings things, I'm looking at the applied volatility around earnings. And it was so early this week, I'd kind of forgotten about it. But Alcoa's implied vol was way the heck up there relative to history, and actually, I saw a couple of volatility sellers that things turned out okay for them, because Alcoa normally moves around 3% off of earnings. It had its biggest move in about 3 years off of earnings last quarter. It actually dropped around 9%. And when I go into earnings season, when we've had a stock that had the really big ugly move, either to the upside or to the downside the previous quarter, you tend to see implied vol a little bit overpriced. And the fact that the stock didn't quite react like it did a quarter ago resulted in pretty much of a volatility crush almost immediately. But now that we get into earnings and trying to keep an eye on what might be underpriced or overpriced, take a look at what happened last quarter versus what happens on average, and that's where I always seem to come up with some of those disconnects. And Alcoa was the biggest one this past week. So don't make fun of that company just because all they do is make metal.
They're so easy.
They can be fun.
They're so fun to make fun of. They're always the big kickoff event, and you're right. There was a little bit more going on this quarter than in previous years, but I'm hard pressed to think of the quarter where Alcoa was really kicked the season, the session, the quarter off with a bang. From a earnings perspective. So who knows? Maybe they have a lot of room to surprise me. But still, speaking of surprises, let's get into the broad vol landscape. Mark, you had an interesting write-up on your blog earlier this week. We also had it up there on the Options Insider, because we were just remarking there at the top of the show. VIX cash, a bit of an exhale throughout most of the week, but as you kind of pointed out in your blog, not so really with the actual VIX options themselves. They were still fairly robust, still catching a bit of a bid from a premium perspective, which I think a lot of our listeners may find a bit counterintuitive. So why don't you go through what you wrote up on your blog and why you found that? I certainly found that surprising. I think a lot of our listeners will as well.
Yeah, we really did see a precipitous drop in VIX volatility, or in VIX itself. And we've seen volatility kind of die off a little bit, especially the last couple days where we haven't seen much movement. But we've seen the demand for VIX options, people buying upside calls and things like that, continuing to be really high. And, that's really driven implied volatility for VIX options to stay near 90, which for a 14 VIX is pretty elevated. With VIX around here a year ago, you would have seen VIX in the 70s, not near 90. So a really big vol premium right now. And, I think it's from a combination of the fact that, one, VIX is low, so you got people stepping in to set up hedges. And two, they borderline dominated the skew curve the last couple of days. They came into SPX and just absolutely strangled May downside. I was shocked at how aggressively they sold off some of that out of the money junk in the SPX. So maybe some of this VIX buying is some people seeing that and trying to trade off of it.
Yeah, it was a funky week from a VIX activity and a VIX underlying movement and vol movement, everything else. Let's just get right into that as well. And maybe in order to kick it off, I know I'm laughing already. My personal favorite mini segment here on the show. I know, Mark, it's yours as well. It is time for Russell's Weekly Rundown.
Now, Russell's Weekly Rundown.
All right, Mr. Russell, you know the drill. Hopefully you're unmuted. The floor is yours, sir. Your mic is hot. Go forth and prosper.
Russell's hot mic. So I'll watch what I say. It's kind of tough to come up with some things going on in the weeklies when we're in the week before standard expiration like we are right now. But kind of along with what Mark Sebastian was just talking about, how the VVIX remains elevated. I think it remains elevated because we're getting April behind us. We're looking forward to May, and you've got later this month, toward the end of this month, you got GDP, FOMC, and you've always got that employment number. So I looked out to the May 11th options just to see, May 11th VIX options, just to see if anybody was doing anything post those three events. And the only thing that I came up with that was fairly interesting was actually somebody put on a synthetic short using the 16 put and the 16 call and protected themselves against a spike with the 23 call. They did all of that for a credit of around 52 cents. They sold the 16 call, bought the 16 put, and then purchased the 23 calls. So they're okay on the downside as long as VIX remains under 16.5 or so. So even, and I think maybe they're taking advantage of what Mark Sebastian was just talking about, where we've got elevated volatility on VIX options despite what VIX is doing going to the downside. And when you see things like that, you got to figure that people are taking advantage of low VIX to get some sort of protection. And as long as VVIX remains above 80, I'm going to believe that we're not quite out of the woods as far as the equity market goes, or at least using the attitudes of the volatility traders.
Yeah, it has been an interesting week to watch. As you mentioned, VVIX getting some love out there, as well as, of course, the old mothership putting up some numbers this week. It's been a few fairly light weeks in a row as we're looking at the old broad VIX options. This week, getting some love, starting off a little light, right around about 350,000 contracts. The ADV right now hovering around 630 or so, and then kicking it off on Tuesday at over 600,000, and then Wednesday being the motherlode day this week. 1.08 million contracts going up on Wednesday. So we haven't seen a million contract day in a little while. So that was a pretty aggressive spike. And then Thursday, south of ADV. But today, actually looking as we are middle of the session or so, about 400,000 contracts having gone up already. And an otherwise fairly uneventful day. So who knows? Perhaps today will be another strong volume day. At least if this trend holds through the rest of the session, they're probably going to be north of that 600,000 level yet again. Looking at some of the big trades that caught our eye, VIX always an interesting beast. We do a lot of UA here on the network, and a lot of times we're talking about these little podunk biotechs that do 300 contracts a day, and then one day they do 3,000. So it's kind of easy to ferret out the other side and the intent and what's going on out there. But VIX, sometimes it's kind of like trying to pick out raindrops in the middle of a hurricane. There's just so much going on out there, particularly on a day like Wednesday. But we'll start with today, just what caught our eye in today's activity. Some upside going up today, in particular the May 25s lighting it up to the tune of about 50,000 contracts. Is kind of the big trade leading the charge out of the gate today. And then yesterday we did indeed see, Russell likes to always highlight the put trades. We did see some put buyers, actually, not in the weeklies, though, out in June yesterday, to the tune of about 24,000 of the June 17 puts, as well as also quite a few, again, May 25, the strike du jour, going up about 44,000 times yesterday as well. And then Wednesday, kind of the hurricane day I was referring to earlier, trying to find a narrative, trying to find some loose connective tissue amongst all the myriad 10 and 100 and 1,000 lots going up on a day like Wednesday is a daunting task, I think, to say the least. We pulled out a few interesting nuggets over here. Initially, some of the large trades, when you first look at it, at first blush, it seemed like there was quite the premium selling palooza kind of across the board, including the July 35s, paper blasting them out 81,500 times for about 65 cents, actually putting out another 6,500 a little bit later, so a total of over 90,000 of those bad boys. Also not against, but really with selling about 81,500, so the same number there, of the August 30 calls, also for about $1.17, $1.18 there, doing that also about 81,500 times. So no premium love over there. Also on the May 23s, a little bit closer to home, paper blasting out about 21,500 of those for about 75 cents against actually doing it twice, so actually about 43,000 total on those May 23s as well. So, but it wasn't all premium selling. Again, a day like that, you're going to have a lot of hither and yon in the prints going up. We saw paper also buying as well, a little bit closer to the fire there. The May 19s, 46,000 times, paper gobbling them up for about $1.45. We also saw people trading sometimes late prints there above the offer here on the AUG 30s, doing them about 40,000 times, lifting offers and sometimes printing through offers to get them for about $1.20 and $1.25. We also saw a bit of a funky three-way here. It looks like it's a long straddle versus calls here. The May 17 straddle, about 20,000 times buying the puts and the calls, doing it for about 360 or so here on the straddle against 20,000 of the May 19 calls. So a pretty tight straddle versus calls there. We're selling the calls, looks like, for about $1.52. Again, there was a lot of prints going up on that day. Those are just some of the interesting ones that really caught our eye. But you could really spend hours sorting through the paper on a day like Wednesday to find some interesting back and forth threads. And I encourage you guys to do that. We like to use our friends over there at LiveVol Pro to do just that. So if we're ever digging through a lot of that meat, surf on over there. Kick the tires for yourself, livevol.com. Get a free trial, so what the heck? It doesn't cost you anything. And you can follow along with the show here as we're pulling out some fun stuff like the hot strikes that were lightening up in this crazy, turbulent week that was from a VIX perspective. And the number one strike lighting it up, not surprisingly, close to home this time. The April 25s with about nearly 320,000 contracts there. And the number two strike a little bit farther out, the June 23s, with just a tick over 300K. Then we drop off a bit to number three with the May 25s. That 25 strike seems to be in everyone's crosshairs these days. About 270,000 open there. Followed number four, the May 30s, 262,000. And then the April 30s, the optimistic but closer to home April 30s, number five, 240,000 contracts. Then we drop off a cliff yet again to number six with 182,000 open of the April 15 puts. It's a long time since we've seen a put that high on the hot strike list, indicative of perhaps a few things out there, including, like Russell was alluding to earlier, some more put activity going on this week. AUG 30s, number 7, 175,000 contracts. The April 28s, 167, pretty much tied neck and neck with the May 23s, also 167,000 contracts, number 9. And number 10, rounding out the top 10 hot VIX strikes for this week, the May 28s with 155,000. Total fairly strong on the open interest, about 8.5 million contracts open, about 6.5 on the calls, and a little over 2 there on the put land. Before we wrap up here with VIX options activity, anything else catching your eye this week, Russell or Mark, that you thought was worthy of note in this maelstrom of VIX options week?
There's huge put volume going up in these areas. One of the things Russell says he looks for is, when we start to see big volume in kind of downside puts, that's a sign that, and in terms of selling, that's a sign that maybe the market doesn't think that VIX is going to explode higher, but maybe the actual VIX sell-off is getting along in the tooth, and we've seen a lot of that. I've also seen a lot of kind of bearish 1x2s go up, things like that. So there's definitely been some belief that selling puts has a decent expectancy down here.
I was just going to say, a couple of years ago, when we seemed to have this really neat pattern where anytime we got VIX under 12, I think that we would get a near-term top in the equity market. And I'm starting to wonder if maybe 14 is going to be our new number on that one. Just wanted to throw that one out there while we're talking. Since you mentioned that having low VIX getting long in the tooth, there seems to be a level that is relatively oversold, and I'm assuming in this environment it's going to be a little bit higher than it was in the past. And that 14 line has been kind of sticking in my mind with that.
That's sticking in your craw. Well, not to preface the crystal ball too much, but I'm kind of inclined that next week may indeed bring a little bit of love back to the vol space. But we'll get to that in a little bit. Before we get to that, let's move on to some other topics that catch our eye out here in the land of all things volatility this week. A lot of stuff kicking off in terms of announcements in your neck of the woods, Russell. Seems like your mothership over there at CBOE really cranking things out. Probably the more easy to manage and digest nuggets for a lot of our listeners is that they're changing the new start time for RVX Futures. So if you are so inclined to sling some Russell volatility, they're starting earlier now, 7:30 a.m. Central over there. So if they're all of you and perhaps overseas as well who are perhaps inclined to sling some Russell vol, and for whatever reason you're not doing it in the options, because I see the options paper, I know you're not doing it there. Maybe you want to sling it in the futures instead. Maybe that new start time will incent you to dive in. And of course, the thing that caught my eye even more this week coming out of your neck of the woods, Russell, and maybe you're familiar with this, maybe you're not, I don't know, is you guys are announcing through one of your new investee companies, Strategic Investments Vest, some interesting new indexes. You guys are always throwing out indices and new tools and things to disseminate, and now adding to that list, we can add the CBOE S&P 500 Buffer Protect indices. And what caught my eye on these, Russell, and maybe yours as well, is a couple of the things. They're replicating, long S&P 500. There's a lot of things that do that, obviously. But what they're also incorporating in this looks like it's a flex. They're actually using the flex. So unlike BXM and puts, which write effectively 1 month options, or in the case of the weekly versions, weekly options, these are going out all the way out into the flexes, which are effectively the leaps going to be 1 year or beyond usually. They could be nearer term in the flexes, but usually the flexes are longer term stuff. And they're trying to buffer protect against the first 10% of losses due to a decline in the SPX, while at the same time setting a capped level to the upside. That capped level is going to be determined on each annual roll date. So it sounds like in that brief description, they're going to write a leap call in the flex once a year, and then maybe play around with that protection a little bit too. I haven't had a chance to dig too deep into the weeds on these, but have these caught your eye? They come across your desk, Russell, and what are your thoughts about putting out something with a flex component, which I think is kind of interesting?
Well, This goes right along with our investment or our partnership here with Vest Financial, because one of the things that we came away from doing our first risk management over in Asia was the popularity of structured products over there, which basically tell you what your outcome's going to be, but they don't walk you through all the different derivative strategies behind the outcome, and that's what these indexes are supposed to do. If you're going to have some sort of tradable product based on some sort of indexable outcome, you got to have the index, and that's kind of the first step toward the having actual tradable products behind these. They're going to be targeting each month as far as protecting you against a 10% down move. And the option selling, I didn't get that it was the cap level is determined on each annual roll date. But I thought that the cap level was going to go along with the put purchase as well. So we'll have to. And the cap level is flexible based on how much premium you can take in for the call option, and of course that's going to vary from roll to roll.
Yeah, that did catch my eye a little bit funky. I assumed they were playing a little bit closer to home with the protection, rolling that and adjusting it. To not do something analogous on the call side seems kind of odd. But again, like I said, I haven't had a chance to really dig into these a little bit. I'll be talking with the guys from Vest in a little while. Maybe I'll ask them that specific question. Meanwhile, I'm going to keep on rolling into some other products that are exhibiting some interesting volatility of late. We've been talking a lot about crude here on the show over the past year or so. We shall continue to do so as long as it exhibits some interesting movement, some interesting volatility. In fact, I think you guys this morning, Russell, were just tweeting out OVX once again catching some life. It was hovering in the mid 40 range for a while there, now gapping up nearly 10% today, hovering right around the 50, actually 50 and a half handle. So I haven't seen these levels in a little while. So again, all what's been going on, all the hither and yon out there in crude oil land. Also, as Mark alluded to earlier, the impending event this weekend, kind of causing a little bit of some interest out there in crude again. Also pulling up the skew here, and this is the flattest I've seen it out there in crude oil land in quite some time. So who knows? This could just be event driven. I mean, we do have that event near term, and of course the near month, the front month is almost your straight up smile, kind of indicating that's a bit of a coin flip going into this event this weekend. But farther out as well, we're still seeing a bid to the puts, but it is nowhere near as marked as it once was, again perhaps indicating that all of the rocking and rolling we've seen out there in WTI, we've been waiting for that one inflection point where it seems like the market is finally perhaps gathering steam to the upside. I mean, it's been so downside biased for so long, it kind of was like a broken record. And then we've seen the little spurts of life to the upside when crude has gapped up a few days intraday, and people are obviously gobbling up calls, but then it retreats back again. The call bid kind of goes away. This will be the first sign of a pronounced, more bullish turn out here. Or who knows? This could just be driven by the weekend, and then whatever happens going forward could change. But again, going all out to the end of the year and beyond, there does seem like there's a little bit more life in these calls than there was even a week ago. Mark, I know you like to watch USO as well as, of course, WTI, and of course, all things OVX. Anything catching your eye out there in the Texas T from a vol perspective this week?
Yeah, I mean, that's the whole point, is that vol's getting a bid. Everybody's trading options around this Doha event. The way I see things setting up is, it's a binary event where the downside of the coin flip pays off a lot better than the upside of the coin flip. If the meeting goes well, maybe we sneak back down to sneak back up to 42, 43, 44. If the meeting turns into a disaster, you could see oil make a real run. So that's why you're seeing vol move the way it is, and curvature is bid in oil. So I'm absolutely interested. It's interesting seeing an event like this where the money is lining up the way it is.
Yeah, it's been a while since we've seen one of these binary type events. I mean, the one that springs to mind the most, that was probably more on the histrionic side, was that, impending day of rage a few years ago in Saudi Arabia. That wasn't as much of a two-sided paper, though. We just saw people gobbling up upside all day long, making calls that now in hindsight seem absolutely ludicrous, loading up on 200 strike calls, et cetera. We're not seeing that. Obviously, we're seeing, like we said, a little bit more two-sided paper out here, but this is the last time I could see this clear and stark of event-driven paper. I don't know, Russell, anything else catching your eye out there in the black gold before we move on to the actual gold?
I think I said a week or two ago that what we may see before a next leg down in oil is, the put buyers kind of giving up. Now, I don't know if the flattening is due to them giving up, or just, as Mark Sebastian just said, and I like how you put it, other Mark, a binary event this weekend with respect to oil. But I think if we start to see the put sellers throw in the towel a little bit, or OVX come back down to the 30s, and a lot of that's influenced by put activity, I'd be concerned about the price of oil if I started to see those sorts of things. So I don't know if this is the early stage of that or the binary thing.
I guess we'll have to just wait and see. Let's move on into the shiny stuff a little bit. Another area that's been exhibiting some interesting patterns of late. You guys remember, a few months back, mid-February, the bid was all to the upside out there in gold, and of course it kind of came off, and we were back to the old smile again. There was no love in either direction, and as I'm pulling up the skew numbers here for good old big gold options. This is not GLD, but those two usually mimic each other pretty closely. It does seem like there's a bit of love to the upside again, but nowhere near. It's pretty equidistant compared to what it was a few months ago, when, again, like I said, everyone and their mother was putting on 1x2s out there in gold land, perhaps reflecting a bit of a concern that the upside cannot last forever here in gold land. Mark, I know you mostly watch GLD. It's been a similar skew setup out there as well. Anything catching your eye out there in the shiny stuff this week?
Nothing exciting. I think Vol's starting to get a little depressed. The curvature, if you're bullish, there's some bullish setups that look okay there. So it's doing what I expected. I think gold's backed off and Vol's backing off a little bit as well with it.
Well, listeners, for those of you who are tuning in live, you could pay attention to Russell's Twitter here, where he's been tweeting out some interesting nuggets, including a cool GLD GVZ chart. I will retweet it here as well for you guys. GVZ, of course, the gold VIX, the much loved, much maligned gold VIX. Russell, why don't you walk our listeners who aren't able to join us live here really quickly through what you're talking about here with this chart?
Well, when I teach volatility, I'll divide it up into the behavior of individual stocks, which is, somewhat event-driven, broad-based index option volatility, which is reactive to what's going on in the underlying market. And then we'll talk about commodity volatility. And I'll always say that it's more of an absolute volatility measure. You can have the underlying market rally an awful lot, and you can see implied volatility go up as well. And like you said earlier, you said that the VIX option space is like trying to pick out raindrops in a hurricane. The whole volatility space is like that. And because oil had been in the news so much, I really wasn't paying as much attention to gold as I should have been. And when I updated my quarterly charts this last week, that's what I just put out there on Twitter. I had no idea that GVZ moved in line with GLD. Sometimes they spike together, but I mean, this is like a 2 or 3 week move where they just kind of moved in sync. And that is going to be a teaching example that I'm going to use for some time, where it's the most definitive example that I've got for the full history that we have for GVZ going back about a little over 5 years now. So and I had forgotten to tweet it when I put the chart together earlier, and I knew we were probably going to talk about the shiny stuff a little bit and the shiny stuff volatility. So I just put that out there.
Yeah, you're right. I'm looking at this as you were talking, and you're right. If I just saw this without any legend on it, I would think they were the same, maybe underlying different time frames, something like that. So they do move very much in lockstep with each other. So if you're one of those out there who hasn't really been keeping an eye on GVZ, you haven't really seen any value to it, this chart may indeed change your mind, at the very least as an indicator that something could be afoot. And this thing. Yeah, these two are really in sync, as they say out there. And moving on, before we wrap up the vol views, we don't talk about rates vol that much. The big story coming out this week now is with all the developments, looking at the Fed funds and others, pretty much the probability, as people like to kick around from the Fed funds, looking like the rate hike in April. Not looking too salient there. Pretty much. It went to effectively nil just a couple of days ago, actually, after the data coming out this week that's showing the economy still has some strength, but nowhere near what the inflation numbers the Fed is watching for. It's kind of confirming what everyone already knew. I don't think anyone really expected them to make a move here in April, but now the real money out there in rates land pretty much coming in line with that as well, saying from whatever minimal probability they were giving it to now effectively nil. But what is not nil are your inputs and your questions and your comments and your feedback for us here on Vol Views. You guys always keep us on our toes. So let's try it again, see if you can keep it up. Let's move on into our volatility voicemail.
It's time to welcome thought leaders from throughout the volatility trading world. It's time for Volatility Viewpoint.
All right, everybody, welcome to the Vol voicemail. You guys heard the man list off the places there. You can hit us up. I also want to add the Mixler. So if you are following us along on Mixler, I know a few of you are out there. And if you are not so inclined, you haven't done so yet, join us every Friday, noon Central, 1 p.m. Eastern. You can live chat, live tweet, live Mixler chat, whatever you want to call it, your questions. You can do that via the Mixler chat room, MIXLR, via the Mixler app, available on pretty much every device you can think of. So grab that. You don't need to be have an account to listen to the show. If you want to ask questions via the app in the chat room, you got to have an account. But you can always hit us up via Twitter or Facebook or some of the other ways you guys like to hit us up. Let's see how many we can get to here in our time remaining. Let's kick things off. Well, let's try this one. Actually, this is right up your alley, Russell. This one comes from Los Angelino. He wants to know about the old single name VIXs. He says, "Hey, what happened to the single name VIXs?" I like how he wrote that. You guys talked about them on the show years ago for names like Apple and Amazon. I don't see them trading anywhere. Were they ever listed? Listeners, if you recall, a few years back on this program, we spent a lot of time talking about them. They were announced by the CBOE, I believe, at the FIA Boca show. So that was probably right about 3 or 4 years ago now, where they announced these new single names were coming out on single name VIXs on products you might want to trade a lot, like Amazon and Apple. I believe GLD, and there was maybe SPY and a couple others were in there as well. I think they're going to launch 5 to start. Obviously, Apple was a name everyone and their mother was trading, a few years back, so it made sense to have a VIX on that. It also was kind of an index unto itself in many ways, so it made sense to have perhaps a more discrete implied volatility measure of that individual product. But you're right, Mr. Los Angelino. We never actually got the products themselves, and I think I have a few takes on why that may be. But let's talk to the actual CBOE guy first, the resident CBOE first, and see what he has to say on that first. Mr. Rhodes, what's your take on why we never saw like a single name Apple VIX?
Well, I mean, we do still have a single name Apple VIX.
Well, I think he means like tradable product.
I know what he means. I know exactly. He's asking why we don't trade options or volatility futures on and the 5 stocks that we have volatility indexes on are Apple, Amazon, Google, Goldman Sachs, and IBM. It's 2 A's, 2 G's, and an I. It's real easy for me to remember. I think that as far as trying to create a tradable market around something like that, and this is me not at the exchange, even though I work at the exchange, you want to have a good number of options feeding into the calculation. I mean, that's one of the reasons we took VIX from 8 options to a couple hundred now. And at times, Apple doesn't necessarily fall into this camp, but the other 4 might. At times, with using 2 expirations, you might only have a couple dozen options feeding into those volatility calculations, which is great for a consistent measure of implied volatility. But you might have some concerns about trying to trade something around that. So that's that's completely my personal opinion on that one. But I think I've mentioned in passing before that my academic work here at Oklahoma State centers around the introduction of new products. So that's more of future Dr. Rhodes than CBOE Rhodes talking.
Future Dr. VIX. Well, yeah, that was one of the ones when it was announced. I think that generated a lot more traction with our audience in particular than I can recall many other announcements in recent memory coming out of the CBOE. A lot of people were excited about those. A lot of people were gung-ho to hopefully have the futures and then subsequently the options on those to trade on the product itself. And then, they never really materialized. And you're right, the devil is always in the details with these things. The good about this is that they are still being disseminated, as you mentioned, Russell. And you might even be using these things without your knowledge. If you're a client of a brokerage house, like let's say Options Express, and you use their Idea Hub, well, that drives a lot of their premium harvesting and other calculations from the single name VIX that is being calculated and disseminated in things like Apple and a few others. So there's going on behind the scenes. Things are using it and platforms are using it. You just may not be aware of that. So it is out there. Unfortunately, you're right. No tradable products on it for the reasons Russell mentioned. I also have talked to a few guys over there who said, just the challenge and complexity of getting, a tradable underlying on that, and then the options on that were probably a little bit more daunting than they perhaps thought when they first conceived of the idea. And so, it sounded really cool. I would have personally loved to sling some Apple VIX or Google VIX or what have you. Who knows? Maybe someday we will see it. Apple, not really the machine it once was in terms of either market cap or indeed of market sentiment behind it. Others have kind of usurped it a little bit, but still, it's still an interesting idea. Maybe we'll see. Maybe that could be the end of your dissertation, Russell, is how to make the single name VIX work in a tradable product. There you go. I just solved your problem for your dissertation for you.
I'll pass that one along. I actually just my dissertation topic got approved last night, and it's not that.
Well, clearly you'll be changing it now, forthwith, as we said earlier.
It took me too long to get one approval. Sorry. You can do that one.
Yeah, when I want to sit down for my PhD in all things volatility, I'll be sure to pursue that one, as well as new product development in the options space. That'll be an interesting PhD to get. All right, let's move on here. We got one from Nick C. He writes, pretty straightforward question here. Does out-of-the-money VIX call, let me change this for him, do out-of-the-money VIX calls suffer from the same inflated volatility premium as the S&P 500 out-of-the-money put? If so, doesn't that make them both prohibitively expensive to use as a hedging vehicle? Well, leaving aside my thoughts on VIX as a true straight-up hedge, I've debated that on the show in the past. I think of it more as a kicker to add to your portfolio for those extreme moments than an actual hedge. Russell may, and maybe Mark may, I don't think Mark does, but I think Russell may disagree on that front. But yeah, you're right. Looking at the flow, and if you listen to this show for any period of time, we talk about a lot of the VIX options flow out there. I just talked about it again today. How many put series did I list in that top 10? Not many, 1 out of 10. And that's an unusual occurrence. So yeah, VIX is, to call it call heavy would be a bit of an understatement. It usually hovers around, I think, about the 2.5, maybe getting heavy around 3 to 1. We've seen it get as high as 4 and beyond in terms of the open interest calls over puts out there. So there is an extreme bid to those calls, and it is analogous to what you see out there in SPX puts, but perhaps even a little bit crazier in some instances because it's even more one-sided in VIX land. Very rarely do you see that much put love. And this week we kind of talked about it a little bit. There was a little bit of put selling, a wee bit of put buying, but very rarely do we see even 2 strikes on the hot chart lighting it up for puts. So yeah, VIX is extremely heavy. Yeah, you're right, it is. That does make them expensive to use as a kicker or indeed as a hedge. I think, what was it from RMC? We came out with a number. Russell, someone mentioned one of the things, if you just went out and bought straight up out of the money, I think it was about 5 to 10% out of the money puts in the SPX, you're going to cost you about over 9% a year just on those alone. So yeah, that's a pretty expensive proposition. I don't have the exact numbers out here for VIX. So maybe Mark, you have the numbers out there, but it's going to be prohibitively expensive pretty much either way you go. Would you concur?
Yeah. Kind of where I think the difference is yeah, you do have the different SKUs and different things like that. One of the nice things about VIX in terms of a hedge, and why I'm kind of coming around to it, is that, and especially as a future, is the sticky strike portion of VIX. But yes, the SKUs are very similar. However, you can actually use VIX SKU to your advantage and create some really favorable call spreads, things like that I think are better than owning like S&P put spreads, because of the way SKU forms and because of the sticky strike nature of of the VIX underlying relative to that in the S&P 500.
And you talked of this before on the show, the myriad lengths you have to go to, because you're right, in those extreme scenarios when the market's melting down, VIX is going to outperform just about anything else on the planet, including the S&P put there. So you want to be in there on those scenarios, but managing your table stakes until that makes it a little bit more of a challenge. You talked about before, the 1-by-2 ratio, sell 1-by-2. That's been a popular way to approach it. Also, I've seen a lot of interesting work with VIX call calendars. The most recent one I think come out of the RMC was that 3-month calendar, but I've seen it in a lot of various flavors. But there always has to be some other component to help you kind of manage your VIX exposure. If you just go out and buy VIX calls, it's like if you just go out and buy S&P puts, it's kind of hard to make that pay off over the long run, unless you have the extreme good fortune to be getting in there right as the moment when the market's melting down and VIX is popping to 40 or 80 or whatever kind of extreme environment you're in. If you have the good fortune to be there, like you were last August, maybe you bought it on, right in the middle of August 22nd or 23rd, then perhaps you're smiling all the way to the bank. But for everybody else, it takes a little bit more work to make that manageable. Mr. Rhodes, anything to add here for our friend Nick C., who wants to know the internal question: VIX call versus S&P put?
You mentioned the presentation from Risk Management, which kind of started out with, if all you ever did was buy out of the money puts, it's gonna cost you. But that was a lead in to something Mark Sebastian just talked about. He was talking about it on the call side, but it was a lead into, and I can't remember the exact strikes. I can remember the lowest strike, a discussion around hedging a portfolio with a put spread, and it was noted that you could do fairly well by selling a 20% out of the money put. Selling a 20% out of the money put, because when we get the 20% correction, more often than not, that's about it. So, and there was some talk about, having different expirations around that as well, maybe buying a longer term call and selling shorter term puts against that. But in the same thing, you could probably come up with something that involves selling, the out of the money VIX call. I mean, we still haven't spent that much time over 30 in the last 5 years. And because of how expensive the farther out of the money you get, the more expensive those calls are. You can actually get some decent premium for like the 30s, 35s, and 40s, and I think that's one of the reasons we see the open interest that we do in those strikes.
All right, we'll have to leave it there because we're coming up against it. We need a little bit of time to head into our final segment. It's time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball. As the name implies, this is the most capricious portion of the show, the time when we attempt to determine what those ever fickle volatility gods hold in store for the week to come. Last week, I was kind of the seller of vol. Russell was a strong buyer of vol. I think Russell was at about a 17. Mark was kind of the Goldilocks in the middle at about a 15.5, and I was about somewhere between 14 and 14.5. And as we are closing out the show, VIX cash right about 14.1 0.17. So I guess that makes me the proverbial winner. I don't know if the winner should go first or go last. I guess I'll go first because you guys always complain when you have to go first. So rather than hearing that, I will dive once more into the breach here again on the program. I know you were trying to talk me higher last week, Russell. I would have none of it. This week, though, I may be more inclined to some of those arguments because, as we said at the top of the show, things are kind of popping off a bit next week. Not only do we have the big oil event over the weekend, that may indeed inject some market turbulence going forward if we get some sort of unexpected outcome out of that. We also have coming up next week, we have Google, we have Goldman, we have my old stomping grounds, Intel, IBM, Microsoft, the Widowmaker, Netflix, Southwest, United Airlines, and even the remnants, the ashes of Yahoo reporting next week. So that's just the tip of the iceberg. There's a lot more going on out there. So there's many opportunities for some sucker punches, some just gut blows to the market next week. So I'm going to lean a little bit higher. I'm going to go more into, let's see, we're about 14.18 right now. I'm going to bump Mark out of his spot from last week, and I'm going to say 15.5 this time next week. And since I bumped Mark, I'll let him go next. It's like bocce.
I like it. I'm actually going to go, I'm going to flip-flop with you, and I'm going to say 14.
Well, look at that.
Believe it or not.
We just completely flipped spots. All right, then, Russell, are you going to be the ever optimist on vol again, up to the upside, or where are you falling, sir?
I'm going to say 10.50.
Whoa.
10.5?
I'm just kidding. I'm sticking with 17.
That would make for a good show fighter.
Oh, no, bananas.
So, yeah, that also would probably be the last time you had me on. I'm still thinking higher, and actually because after next week, we do have, the beginning of a couple of weeks where we've got some pretty major numbers. I think that's going to add a floor to it as well. So I'm going to stick with 17 or so. Eventually, I'll be right.
You're serious? So everyone is pretty. The numbers are the same as last week. We just changed the people behind them. Mark S at a 14, me at about a 15.5, and Russell just keeping. If you keep playing black at the roulette table, I've heard over time it does come true, right? It has to happen, right?
Eventually.
So that's
eventually, yes.
So with your infinite corner office wealth, that's an approach you may be able to take. We'll see. In the meantime, though, listeners, that's pretty much all the time we have for this episode of Volatility Views. It's also all the time we have for, of course, all things Vol Talk. But before we go really quickly, let me check back in with my cohorts here on the old Volatility Views panel. Let's start with the greasy meatball. What's cooking in the land of Carmen Line and or the Pit?
We're doing a long-term strategies and hedging class at Option Pit. You can go to optionpit.com/long-term. It's going to be on the 7th. And I will be use code 25_off to take an extra $25 off.
There you go, listeners. Surf on over to optionpit.com to get yourself some deals. And I don't know, Russell, I don't know if you have any deals. I got a deal for them. If they go to livevol.com, they get it for free. That's not bad to get a free trial there. That's a pretty good deal. Can't really beat free. Other than that, I don't know what else you got cooking that may interest our listeners over there in the land of all things CBOE, Mr. Rhodes.
I'm kind of hitting a lull period, which I sort of need to get caught up on a few material-oriented things. But I think we've got a women's class coming up to coincide with Money Smart Week, which I believe is the last week of April. We've got a couple of college programs, one in May and one in August. And actually, one of the people that coordinates our institutional class, which is always in mid to late July, he's actually a professor here at Oklahoma State, and we were actually meeting and putting that together as well. So nothing in the immediate term, but we've got a lot more on the longer term horizon.
There you go, listeners. Of course, surf on over to LiveVol Pro or LiveVol.com. Check out LiveVol. Of course, surf on over to CBOE.com to learn about what Russell and all things Options Institute are cooking over there. Maybe you too can take a class over there and see the corner office for yourself. You can add that to the tour. So going forward, you get the tour of the floor and maybe the upstairs and maybe a swing by the old corner office for a sip of the old Earl Grey. And on behalf of hopefully one day Dr. VIX and also the Greasy Meatball and indeed myself, I want to thank all of you out there in the listening audience for downloading, streaming, subscribing to the show, for sending such great questions. Keep them coming, and of course, for also joining us live. MIXLR, grab the app, surf on over, follow us on Twitter. We tweet the link out before the show every week as well. And we'll see you next time for more Volatility Views.
Thank you for listening to Volatility Views, the premier program for volatility traders. For episode archives and detailed show notes, please visit theoptionsinsider.com/volatilityviews. Be sure to make your own voice heard by leaving a volatility voicemail at 773-669-4VOL. or by posting a comment on theoptionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider. Volatility Views is brought to you by Russell Investments, a global asset manager and one of only a few firms that offer actively managed multi-asset portfolios and services that include advice, investments, and implementation. For more information on Russell Indexes and RVX, please visit russell.com/indexes.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.